We've had a busy week over here, Alasdair. It's been fantastic. Silver is up and doing amazing things. I think I can see this as being a similar bull run. I'm anticipating it's going to be something like it was in 1971 through 1980. It's on everyone's lips at the moment. Seems like very exciting times ahead for those holding silver. I know that you've been bullish, Alasdair, on silver for the last 12 months now in particular. And as we speak, silver is up 33% over the past 12 months, 20% for the year so far. In the last 3 months, silver has exploded, really it has, and seemingly broken, I believe, the shackles that were holding it down, and has surged from $50 Aussie to $59 Aussie, as it is right now as we speak. Michael Oliver from MSA Research just recently predicted silver could reach $70 to $80 US an ounce. He predicted that by the end of the year. Do you believe that silver has finally broken the shackles? And what are your expectations for silver from here moving forward?
Yeah, I think one point that virtually everybody has missed is it's not just silver. I've got in front of me year-to-date performance, and top of the list is platinum with 56%, palladium 42%, copper 35%, and then we got silver 28% and gold 22%. It's clear that this is more broadly based than just silver. And in fact, for my Substack readers, I put out an article yesterday examining the position repricing base metals, in other words, industrial metals, in gold. And the value of a basket of base metals is now 23% of what it was in 1900. Now, looking at the price in 1900 of that basket, that is actually, really a sort of normal gold to base metal relationship. So to have it 77% below that today shows just how cheap base metals are.
Yeah.
Now, silver has been trading as a base metal. It stopped being money in the official sense, as it were, in the 1870s. And of course, it has varied in terms of the gold to silver ratio. Peaking, I think, just before COVID lockdowns in March 2020, with a gold-silver ratio of about 121. But now it's back down to 87. Now, what is happening is that with gold running ahead, that has pushed down the ratio of gold to these base metals down to that 23%. But silver is beginning to escape with it. And not only that, but some other metals are beginning to move with it as well. So what we are seeing is not just silver moving up, but we're seeing the whole of the metal complex going into a bull market, if you like, relative to gold. So we then ask ourselves the question, well, does this mean that gold is too expensive? Because that could be the other side of the coin. Well, if you look at what gold is basically the safe haven out of credit risk, the principal risk being fiat currencies. The only way in which gold can fall from the current level against those currencies is if remedial action is taken by those currencies to deal with their ills. And we see absolutely no sign of that whatsoever. If anything, the fall in the purchasing power of these fiat currencies measured by their relationship with gold is accelerating. Now, this is very alarming. And we know all the reasons for this. We've discussed this, the debt situation, the impossibility of controlling government finances, and so on and so forth. But it is clear that the dollar and other fiat currencies are going to continue to fall against gold giving the appearance of gold rising. So we come back to base metals. If base metals, including silver, measured in gold, have to rally to 4 times their current level in order to normalize their relationship with gold, and gold itself, measured in paper currencies, is going to increase even further, you can begin to understand why it is that these base metals, and particularly silver, are really beginning to shift. And just if silver just normalizes its relationship with gold, we're going to see that far, far higher, far higher. And if gold rises, in other words, paper currencies continue to fall, then measured in paper currencies, the value of silver, it's far, far too cheap, and it's probably never, ever been cheaper in recent years. Yeah. So that's the basis of my bullishness, if you like, for silver.
If one goes back to 1971 through to 1980, the surge in silver then was astronomical. I mean, gold was a huge performer as well, of course, but gold was up like 2,400%. Silver's 3,600% over a 9-year period in that bull run. I mean, we got to a point where 1,000 ounces of silver could buy a median property. Silver, $50 an ounce. 1,000 ounces, $50,000. A median property was $50,000. I mean, this seems absolutely and totally extreme, but can you see is that possible that could reoccur? I believe the ratio got down to 15-1 at the time. Do you see that as a possibility? Anything like that happening again?
Well, I mean, rather than look at it in terms of relative to property, I mean, by property, I mean residential housing. I think that's a completely separate market. I would see residential housing falling both in paper currency and also gold in the short term. Why? Because we are going to see rising interest rates. That will raise the cost of financing through mortgages. And it is mortgage availability and the cost of mortgages which actually determines the value of residential housing. So I'm afraid that housing has got probably a bit of a vacuum under it. We're certainly seeing that in this country and the UK at the moment. We're particularly in London with the wealthy fleeing to Dubai and elsewhere. There is property on the market. It's not selling at all. And I can tell you around the country here, it's not selling at all. I mean, we've got friends who've got properties. They're desperate to move and they can't find buyers, which tells me that property values here are too high. And when we begin to see interest rates rise, then that is going to be really the death knell, I think, for the idea that your best investment is the roof over your, the roof over your home, as it were, or house or head or whatever.
Yeah.
So this is, I think, I'm looking at property, I think, in that sense, rather than in some sort of ratio with silver. I mean, we do know that property values get destroyed in the event of the collapse of the currency. I mean, many times I've pointed out the anecdotal story in Stefan Zweig's autobiography, going through the big inflation, hyperinflations in Austria and Germany. I mean, there was a time when $100 could buy you a 6-bedroom house in Berlin, and not in a poor part of Berlin, in a decent area of Berlin. I mean, the problem with property is that it gets, when you get hyperinflation, the cost of maintaining it and the value of the rents, literally, I mean, they just make they undermine the value of the property completely. So, and this is why, the people who have got wealth in form of coins or exports, gold coins or silver coins or exports or whatever, like the inflation king Hugo Stiglitz, he was able to rush out and buy this, that, and the other thing, including country estates, the whole caboodle. I mean, he was the wealthiest man in Germany by far, and he'd got that really by exporting and earning in dollars, which at that stage were fully convertible into gold. So that's not the way I would look at property, at a relationship between silver and property. I think we just look at silver in terms of on its own merits. It's got completely suppressed, and that is now changing. And I think this sort of the suppression, it's almost accidental. I mean, obviously there is suppression and there is manipulation in commodity markets. But when you look at the whole of the base metal the whole of the base metal complex, the fact that they've been suppressed in terms of fiat currencies, I think means that there has been an under recognition or adjustment in the markets for the loss of purchasing power of those currencies reflected in base metals. In other words, base metals have been relatively suppressed over a considerable period of time. That is changing. It's a big change in our world, and it's got enormous implications for inflation. Let's put it this way: the future purchasing power of these fiat currencies, because the cost of goods and all the rest of it, and it doesn't matter whether we have an economic slump on the 30 scale, but the cost of everything, the base cost of everything, is rising because of the loss of purchasing power of the currencies. Call it inflation if you like. So you can see this is an underlying problem which is going to emerge, I think, over the next 18 months or so.
Yeah, I think one of the things I think, Darragh, we have to be very careful of, and this is just a general statement, is the fact that it's very easily to be knocked off the horse and say, okay, silver or gold is having a bit of a dull period, let's look for something else, because those dull periods actually don't last very long at all in this whole scheme of things. I know when silver didn't move for 12 months, but I didn't sell a cent of it, an ounce of it. I kept all of the silver, and you have a look at it today, it's on a rip-roaring position. So it's a very important point that if you get knocked off the horse, just get back on and don't sell your position unless you are a brilliant investor